Production costs are capital or funds that must be issued by a company in making a product or service. What is meant by production costs? In simple terms, production costs are the accumulation of expenses required by a company to be able to process raw materials into products. In other words, the total costs incurred for the production process are called production costs. These production costs include various costs, such as labor costs, raw material costs, and factory overhead costs. Thus, the notion of production costs is the cost of production incurred by a company to produce an item or finished product, until the goods are ready to be marketed or sold. Types of production costs. In general, there are 5 types of production costs that are known to accumulate expenses when managing goods. The following types of production costs exist in manufacturing companies. 1. Fixed costs. Fixed costs are expenditures whose amount will not change, even though the volume of production of goods has increased or decreased. This type of cost has a certain nature, so it can be budgeted appropriately. 2. Variable cost. Variable cost. Variable costs are costs that depend on output. The higher the production of goods, the variable costs will also increase. 3. Average cost. Average cost. The average cost is the cost per unit that will be obtained by dividing the total expenditure by the amount of production output. This average cost is needed by the company to determine future production decisions. 4. Marginal cost. Marginal cost is the additional expenditure that will be used by the company to increase production. Companies can find out the maximum amount of output that can be obtained during the production process by adding marginal costs. 5. Total cost. The total cost is the cost obtained from the combination of variable costs and fixed costs. This total cost will be information regarding the total amount of expenses incurred during the production process. Elements of production costs. The cost element includes 3 things, namely the cost of raw materials, direct labor, and factory overhead. These 3 elements drive the formation of the cost of finished goods at the end of the accounting period. 1. Raw materials. Raw material costs or direct material production costs are costs incurred by companies to buy and process raw materials into finished goods. 2. Labor costs. Labor costs are costs incurred by the company to pay labor wages. In other words, labor costs are in the form of wages, benefits, and insurance paid to employees who are directly involved in the process of producing goods or services. 3. Cost of overhead costs. While overhead costs are costs incurred to support the production process, these overhead costs are not directly related to the production process, but help smooth the production process. Examples include factory utility costs, building and land rent, machine depreciation.